Hey team, very good morning. Hope you're doing well. Just a quick breakdown for the day ahead. Thursday, the 7th of May, 2026. So my favorites today, of course, using the DXY, will be UJ longs, AU shorts, and also GU shorts. Let's take a quick look at that for you all to see if it can give you a helping hand throughout the day. So of course, the DXY, much of the same bias as we've had for pretty much a couple of weeks, to be fair, rejecting that weekly order block. What else is there in particular on the DXY? Still no 4-hour order block for us to look to manipulate, so we're pretty much down to the lower time frames and rely on that 15-minute, to be honest, to have a look at the shift. If there is to be one, let's make that slightly wider. So there's a couple of areas that I'm interested in how the DXY is going to perform from those. Of course, where the DXY is currently holding, that is of an area of interest as a result of price actually holding from there. However, I wouldn't be looking, obviously, to use DXY strength initially as a result of price just staying in and around this area. What I mean is price not actually breaking up and coming straight back in, looking for that bullish pressure. I don't think that's quite good enough, considering it's just the start of the day, and also the cross pairs aren't ready yet. So in order to gain whether or not the DXY is ready to move, I think first and foremost, it would be good to understand what we'd be looking for in the cross pair. So AUDUSD, of course, looking incredibly bullish on the 4-hour time frame. Yesterday's daily candle also very, very bullish. However, with respect to that daily order block, which is quite important, if we closed above, it would be a completely different bias. However, as a result of being in that weekly order block, I am still forced to be sell bias anyway, regardless of what the overall lower time frame trend is telling me. But as I say, the good news is that daily candle close within that daily order block. So we're looking to use that previous daily high wick as strong confidence to take price down. You know the reasons why. The wick is telling us that essentially price tried to close above there, and for whatever reason price is failing to break above and fully close above that daily order block, which means liquidity in the market wanting to push price down. Right, so what else do we have on this? When we start to put that previous daily high on the chart, previous daily high through to the 4 and the 15, we can see this is the outlook at the moment. So in my opinion, still no active reason to look for a short just now. I feel that because price is still bullish, although I won't be looking for longs, in line with that bullish sentiment, I do believe the overall bias will be short. However, confirmation is going to need to be required. As you can see, we're making highs from this area, so the key structure point is somewhere down here, to be honest. However, as always, intraday perspective, understand where price is failing to break below. So after this high, in and around this region or anywhere before this area, could simply be that higher low for the high continuation. So where we want to safeguard ourselves against that is wait for a break of structure first and foremost. Then hopefully this order block is still available and price hasn't come up to it first. We'll talk about that in a moment. Once you get that break of structure, still be waiting for some confirmation, because of course this still, if it doesn't break this area, could be a deeper pullback for that higher high. Therefore, break of structure required up at these areas before looking for that short down. I do think that's going to be one of the favorites of the day in terms of short positions. If price comes straight back into this area, I wouldn't personally be looking for an aggressive level of entry, because your range, I mean, I won't be doing it. However, if you are to exercise that, then of course it could still make sense. But my suggestion would be to manage your position very aggressively as a result of the fact that price could just do that. So be very smart in your break of structure that you're looking to use. If you are going to look for a 1 minute break of structure, and understand what that 1 minute is really doing. Is it trending like this? And then you have clearly waiting for the break of the most recent higher low that created the higher high. Then price comes back in, then you're looking for the trade. Alternatively, what I wouldn't be looking to do, so if I was going to take that aggressive, which I'm not, this would be the method that I'd be looking to use, the break of the most recent higher low before then price coming back up to the order block to take that short. However, what can be done in error is if price starts to trade up like this into your area and there's a hold up of candles on the 1 minute time frame, then you get a break and a pullback. Understand that is not a break or structure. Your structure point is still clearly here. This is incredibly aggressive, which is an entry model, but not from this area. Not when price is against you pretty much on all intervals. So not to say that's a bad method of entry. However, it's about where it is, not necessarily what it is. So where this is, it's still quite a high risk area. We're just using the overwhelming bias of the fact that I believe the DXY should be looking to go long today and tomorrow. And then with that said, of course, the cross pairs are going to look to go short. So we're going to use the DXY as a full amount of confidence to take that position. 1 minute break of structure, if you are going to use it up at these highs, be very aggressive and ensure that you are break even by the imbalance of the opposite direction in terms of you haven't broken structure. Therefore, when price gets to that overall structure point, you need to be managing your position even before price gets there. As I've said, that could just be a deeper pullback for a higher high. So that's AU. Seems a bit complex, but simply put, break of structure, pull back, look for your cherry on top of the cake by way of break of structure on the 1 minute time frame, and then look for that short position down. So that's AU for me today. Bit of a favorite. GU. Where are we with GU? So GU weekly time frame, high time frame order block, approaching previous weekly highs, wick imbalance. Yesterday closed quite nice on that daily time frame, giving us a wick to the highs. We'll seek if we can manipulate that wick to the high, as well as understand where that wick imbalance is. Previous weekly high, wick imbalance on that weekly time frame. That's obviously also going to give us tremendous amount of liquidity coming out of the market, and also if the higher we go with taking short from GU, the better the range down to that 4-hour 50 EMA, where price is currently respecting. And no, I wouldn't say we've made we're definitely not in an uptrend per se. We've made a high from this area, like so higher low, failed to make a higher high, and this could be the turning point. So wait for that pullback up before the short. But as you can see, a very nice clear pattern there. I don't know if you're familiar with M's and W's, not something I talk about, but it's something I'm aware of. If it shows up, make it make sense, right? So that is the 4-hour time frame. To be fair, there is also a very old 4-hour order block in and around that region as well. So let's put that on the chart just to understand exactly the confidence that we have going into the short position. So if you're looking for a short position, it's always best to short from as high as you possibly can in terms of your refined area. So we can see here this was previously a 4-hour order block. I mean, it still is a 4-hour order block, but it's losing its meaning as a result of price just trending out of it, trending in it. That's not really the basis for taking that position. I'll get rid of it. You guys see where the price is. Again, a bit of the same type of action for GU. The only difference is I believe that GU isn't as strong as, I believe the pound isn't as strong as the dollar. And the reason why we come to that conclusion is look at the wick to the high that we got on the daily. However, yesterday on AU, we had quite, in my opinion, a stronger close. And we broke structure points quite tremendously on the lower time frames as well. So looking at GU, we can see up at the highs, as we were saying. This 15-minute order block is still valid. Aside from AU, we're having to create order blocks by way of the fact. Well, let's go back to AU so I'm not confused. Okay, yeah, so we had an order block to the left on GU that we're using. AU, we're using an order block that has been created but hasn't really done anything. I wouldn't say this order block has broken structure on AU, hence why I think it's very, very important to wait for that break of structure coming out for the area and then still get the confirmation of the highs. Whereas GU, we're using an order block from last week, which is still available. Not to say that means then you shouldn't be waiting for a break of structure. I still believe that the better type of action would be to wait for a break of structure. However, here on GU, I'd be much more inclined to be a little bit more aggressive, particularly if price comes into this order block here, taps into the wick imbalance. So being aggressive you still have to monitor price action to understand what's going on. So we've got tremendous range, in my opinion, down to that 4 out of 50 MA where we're looking to manage the position out by, and the short position would be much like AU. However, AU, where I wouldn't be wanting to wait for that 1 minute break of structure, imbalance short. GU, I wouldn't mind it. So price is going to come up like so in an ideal world. Be patient as a result of knowing that wick imbalance is there, knowing that previous daily high is there, recognizing that price is going to really want to gravitate towards those areas, and then I'll be waiting for that shift on a 1 minute time frame, break of the one, pull back, imbalance, and then look for the short. So again, it's going to be an aggressive position, but the reason why I like it as well, if you're able to short from in and around these areas, let's have a look in terms of stop loss placement. Usually I'd be saying 10 to 15 pips maximum on GU, but once you consider the range, it makes sense. I'm not going to cut myself short, which I could. One to consider, I think once you've waited for that 1 minute break of structure, because let's say, if you've broken structure to this area first and foremost, and then prices come back up, then yeah, I'd be going for a 10 pip stop loss. However, if price doesn't break structure first, and you're going for the aggressive position, what I'd be more inclined to do is understand that actually, because price is still in an uptrend without breaking structure, there is more than likely that, not more than likely, but there is a likelihood that after this high, this is the higher low for the higher high continuation. The higher high could just be price tapping into that wick imbalance. That's fair to say, but a higher high could also be this area as well. So being aggressive, definitely would have to wait for the 1 minute break of structure. Definitely, in my opinion, you'll be having a slightly larger stop loss or double in size, and still looking to manage that position towards the 4 hour 50 MA like US dollar CAD yesterday. Yeah, so that's the both examples there. Break of structure on the 15, pull back into an area of imbalance, 1 minute boss with a smaller stop, no break of structure, 1 minute boss, larger stop. I think that makes a lot better sense. Yeah, that would be the bias for me. And then UJ, bit of a favourite as well. So of course, you know, the weekly 50 MA, looking to reject that for the week. The only caveat to taking that position is price actually hasn't tapped into that weekly 50 MA. However, look at the daily rejection candles. It's telling us to, in my opinion, the technicals are saying perhaps we won't trend down into that weekly 50 MA. If you look at the weekly time frame, sometimes we aren't actually touching that weekly 50 MA, but it's one of those where you just kind of have to lead with the technicals and understand that there is always a reason to be wrong. Previous daily candles reject that daily order block perfectly. So if you look at the previous daily low to give ourselves a bit of a guidance where price may well look to gravitate towards, you can see here refine within the 15-minute order block. Let me make it slightly bigger for you. 15-minute order block, a little bit too large to really want to get involved. I mean, it's not, but I think there is a better opportunity, and that is the refined 5-minute order block. Go to the 5 for you to have a look. You can see right there at the lows. Why does that make sense? Well, because previous daily low is in and around those areas as well. For UJ, it's not something that I'm going to be super aggressive with if I am looking to take it. I think it would be best if you do get a break of structure, like on all positions. If you get a break of where price is holding and then price comes back down, then you can be really aggressive on your entry. Even that's opportunity to set limit orders because you have your setup confirmation. Without having your setup confirmation, you're just trusting an order block that hasn't really done anything just yet. As you can see, the order block has only been created as a result of one bullish candle that's allowed us to select this tremendously large 15-minute area, and then price is just trending within it anyway. So what I'd be inclined to do is see if price is willing to break above. What I can say, what do we have here? There is another 15-minute order block now. Come to see it. just here. So a couple of options. If price breaks up, I'd want to seek confirmation here, lower time frame, before looking for the buy. If price doesn't come up, then I won't be I won't be using this order block at all, because price hasn't done anything different. I would then be expecting price to want to roll down. Oops, sorry. I would actually expect price to want to roll down to this 5-minute order block. So without a break, I'm not interested at all in this area just now. It's not an Asia range either, as a result of price not breaking structure points to the left, and certainly not here either. So there's no reason to want to take this position. Let's say then, for example, price breaks up or doesn't break up, but price, let's get rid of that. Let's say price doesn't break up, comes into the area, then makes a push, then absolutely when price comes back here, I look for a 1-minute break of structure, be very aggressive and take the long. So that's an alternative. How can I not confuse you with all of these drawings? Okay, so that's one scenario. If price breaks up, doesn't give us a 1-minute break of structure here, into the 5, 1-minute break of structure, I'd be aggressive there, but take the long. And then what is the other alternative? No break at all. No break at all, comes into the area. It's going to have to be a bullish engulfing candle, which will then allow me to give me 15-minute order block to then trade from. Once I grab that, 1-minute break, long. So that's the alternative. I like UJ, makes good sense alongside the DXY. And then with that said, just to head back to the DXY, recognition of where we are on the 15-minute time frame. These are the reasons why you're not necessarily going to be looking for immediate positions, because we wouldn't, if I was to trade the DXY now, I wouldn't be looking for a long just because prices return to this area. I want the DXY to show me something first, pull back, and then off we go. If we don't get the confirmation here, then of course you can understand why the cross pairs will roll slightly lower for the lower time frame break of structure, and then the long on the DXY. So I think that makes good sense across the cross pairs. The DXY is pretty much imitating this. So if the DXY doesn't hold the current level that it's at, then of course it will roll shorter to that 5-minute order block here on UJ, and also down to these lows on the DXY. So it makes good sense. You've got the previous daily low as well there, and then UJ corresponds perfectly with the previous daily low, so it makes absolute sense. AU, if the DXY rolls short, then of course AU is going to pop up. If the DXY rolls long and breaks the structure towards the upside, then of course we'll get the break of structure here on AU. Look for the short, also synced very nicely. And then GU seems a little bit further away from targets. Perhaps there is a better 15-minute order block that price could want to come to, but because this 15-minute order block is very much so available, initially I want to use it. If we get a break of structure from this area and we can locate there's a 15-minute order block somewhere else, then perhaps if price is going to return to it, where could I put one? Just here, for example. Let me be speedy. Just there. If you get a break of structure and then price returns back to an area that you haven't first forecasted, then you're looking for a 1-minute break of structure from there and then short it down. No break of structure, definitely up at these highs, but I do think a break of structure on GU would be best. However, you could take it aggressively from there in a 1-minute break of structure and AU. No aggressive positions, in my opinion. Break of structure first, then take the short. All right, team. Good luck in your trading day. Thank you very much, as always, for being here, being present. And Michael, good luck, my friend. Take it easy, be patient, be disciplined, and make sure you continue to journal your trades, and you'll be just fine, without a doubt. Everyone else, good luck today. Take it easy. Speak to you soon. Ciao.